Hi traders, welcome back. In today's episode, I will analyze the chart of Bitcoin, focusing on the correction that happened here on the second half of August. And we will look at other risk-associated markets that are staging similar corrective patterns, looking for an intermarket confirmation. So let's get it. So in Bitcoin, this is a weekly chart, a logarithmic chart. We just lost that ascending steeper support here to rest here on the blue line, this multi-year ascending support as well. We are just resting down here. We lost an initial level of support comprised by these green lines. These green lines offered support in several instances in the past. So this is a known angle. If we go back in history, we see that this angle proved to be support and resistance along the way, and we just lost that angle here. We traded below, and the price is now being halted here by this descending support, also a green line, also an angle that is very familiar to Bitcoin in its history. And the combination also of this horizontal level here, traced here from this small base building here in November 2020, and this descending line, the green line, and the blue line. So we're still at key support here, and below that we have empty room until here the next blue support here, just above the 10,000. And here at 14,000, also an interesting intersection between an horizontal and descending dynamic support. So nothing very negative here. We have just a first negative signal, which is the loss of this steeper angle, but we are still here holding above the previous low of June this year. So so there could still be some hope for bullish cases. What I want to do is to jump to other risk-associated markets here, like silver. This is the also a weekly chart of silver, an arithmetic chart in this case. In silver, we did print a lower low here, but in the case of silver, we can see that we are reacting here to the same area of support that was created here in summer 2020. So this whole affair here, we are still reacting to this same level. So although we have printed here a lower low, this lower low hasn't a very negative significance, because the second low hasn't reached for a new support level, a new significant level. It's still reacting to the same one. It's just that the shape of the price action or the price structure in this case printed a lower low, but it's we don't see that being confirmed by other markets, as we shall see now in a minute. So and besides, we are reacting to that same level, as I said. So this lower low isn't as bearish as other lower lows, or a isolated lower low. Technically, it could be interpreted, right? So here we lost also an ascending support, and that is negative in fact, but we're still holding here above this descending one. These scenarios that we have drawn here in the past can now be re-raised. We had here a confluence at $24 for next week in silver. The price target obviously is very far now, but in terms of timing, the confluence is still very valid. So we could still see here a reversal of fortune, or we could see an acceleration in the price of silver, breaching this descending support, which would be very negative. Breaching and breaking below a descending support is a bearish omen. We also lost this path here that was eventually the way towards this intersection north here at $23. This would be a bullish idea here and this ascending support that we just lost could have served as a place to trail the stops in case of a bullish case here towards these higher targets. Now we have this lower target here at $16 coming up in January. So if we start trading here negatively within this territory, we could extend this corrective pattern that we saw since summer 2020 towards this lower low here in January next year or end of the year. So we would keep an eye on that. But if we look to this in relation to what we saw in the price of Bitcoin, we don't have more bearish confirmation than what we saw in the price of or in the price structure of Bitcoin. We just lost one level, but it's not very negative at all. In the price of gold arithmetic chart, we haven't printed a lower low, and we are still reacting to that same level, to that same June 2020 level. The difference here is that silver reacted to this level the first time now, and gold has reacted to this level several times. This was a level that was proven to be a good buying level for buyers here in gold several times. The last one here in July, and then we had a drop, almost erasing almost all the gains that what were captured here by buyers at this level here. But the positive note here is that we haven't lost this ascending support level. We are just trading, just sitting on that level with this little green candle, this week's green candle. We did pierce down here, but you see the close of last week's is above that support. This is a positive note as such, and we have still that intersection here coming up for November at a higher price here, but we would need to break that descending support here to see those higher levels. But also here we don't have any confirmation of downside continuation. The markets could still eventually look for this blue line here, this descending support, could similar to silver start trading within this area. In that case, it will start a more negative or would have more negative implications for other markets. And if you look at the Nasdaq, also a risk associated market and very correlated, highly correlated with Bitcoin lately on a logarithmic scale, we see that correction here. The correction could have, we have this descending line. We could move this line slightly from a little bit higher, but what we can extract here is the speed this correction is showing, with some gaps here between the weekly candles. But the positive note here is that we are far from this low in June, so we are still within very normal retracement parameters here, and in this correction. We can say the same with the correction in gold. It's a little bit steeper, but the close price is still within corrective parameters, a bit more severe than in stocks. And even Bitcoin, the corrective measurement here in terms of percentage, or if we would use a Fibonacci scale here to measure this, the magnitude of this correction, it's still within normal corrective patterns. But the fact that we have corrected more than 50% of this ascending move here from the low in June, this already points out that if we should see a progressive price action from here on, then this would be not very impulsive in nature, probably, because because we have seen this strong overlapping price action here of this down wave here in comparison to this upper leg here. So it doesn't look very impulsive. So if we see a progression towards higher prices, we could see this in with strong corrections along the way. Okay. Different here, the correction is not that strong, but it's very fast. So we will be careful with that. We could still there is still a lot of room here to the downside. We broke below this descending support that was support here in earlier this year, and we have a lot of room to the downside here with some interesting intersections here. Note that we have an intersection here on the 3rd of October, similar to Bitcoin. We have this lower intersection here pointing to the 3rd of October. So this doesn't mean that we have to trade on the 3rd of October. We have to touch that level in price terms, but this already hints that October could be a volatile month. Okay, we have a lot of room here to explore. And if you look at the Nasdaq in arithmetic terms, interesting here, we have an intersection coming up next week. We had an intersection here in the mid of August. This interestingly proved to be a false upside break here with these two candles here emerging above that line. This support, we see that this ascending support here, we could migrate this line here to the bodies of the candles, and these bodies would have reacted to this area, to this same line. But what is interesting here is the loss of this descending line that was has been used in the past for to note support and resistance in this Nasdaq arithmetic chart, and we lost that descending line. So we'll take an eye on that in the future, eventually drawing a new angle or seeing what happened here. So nothing more negative here also, because also here we haven't lost any significant support, but similar to the arithmetic chart, to the logarithmic chart, we have room to go here to the downside with some intersections here for especially here in December. So we could start exploring this lower level here, and similar as to Bitcoin long term, would still be in a correction within a bullish major trend or long-term trend, right? This is the area where we reacted here in March 20th, a very important V-shaped reaction here. Another V-shaped reaction happened here in December 2018. So we could see a reaction towards the end of the year to this long-term multi-year support here. So we will see what happens. We need confirmation. So the break of this ascending support here, that would be the intermarket confirmation that we are headed to a second half of the year with a more negative mood, also probably seen in the crypto markets. So wrapping up the analysis, the price of Bitcoin is sitting at a support and resistance intersection. This means it could extend the fall or react higher from here in terms of timing. We don't have a bearish confirmation when looking at the charts of the Nasdaq or precious metals like gold and silver, but because most of these markets did not lose significant support levels. But we see that for stocks and Bitcoin, October may become volatile because of the gap between current prices and the next layers of strong support. So that's all I got for you today. In future videos, we will cover more markets. So subscribe to the channel if you don't want to miss future episodes. Until the next time, be safe.